Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there in Wall Street and make it understandable to you on Main Street. We finally broke the losing streak, down 4 straight weeks. Well, not last week, up 0.5%. Cue the confetti. Why? Fed came out in the middle of the week. We are on your side. We'll back you. If growth slows down, we'll start lowering interest rates. But 2 short weeks ago, I said to you out there in Flagship Nation that both China and the United States hate losing, and that when they watch their markets and they watch their economy, they will do something to prop that up. Well, China did exactly that and threw a ton of stimulus on their economy, which helped the global markets. Did our administration follow suit? Here's your week in review. Well, to answer that question as of this print, the answer is yes. What happened? The administration came out on Monday and said, you know what? Maybe these tariffs will be targeted versus a broad-based tariff when nobody knows what's going on. The market rallied substantially on Monday. But news about you out there, the retail investor, came out. Your confidence level in the economy and the market is nearly at an all-time low. And get this, retail investors are trading their 401ks and going to cash out of stock at record levels. And avid viewers of this blog know this, that we ascribe to the Main Street investment theory. When everybody in Main Street's doing something, you out there need to know that we do the opposite. But as of this print, the market is up marginally for the week. Again, I say this almost each and every Friday. A lot of people are taking their ball and going home in anticipation of this April Fool's joke. Now here's what to look for next week. Again, the elephant in the room is this: reciprocal tariffs, targeted tariffs. Who knows? And my guess is even on Tuesday, on April 2nd, we won't truly know. I believe that last week was in the eye of the hurricane, and we still have to get our way out of it. And towards the end of the week, we also have corporations confessing their sins. We're in an earnings period where, again, the corporations that aren't making their numbers confess. So volatility, again, folks, is here to stay. But I believe that March 13th was the bottom of the market, and we continue to buy on dips. Here's your personal finance tip of the week. What I want you to do out there in Flagship Nation is look at the entire picture. What do I mean by that? You have short-term money in the bank because you listen and you watch this each and every week and know that your short-term money shouldn't be in the stock market. Intermediate, long-term money needs to be invested in the market, but diversified. And again, we don't chase, but look at it all in one picture and not one sector and try to take money out of cash and go to stock or go out of the stock into the cash. Again, you out there as retail investors are trading these 401ks and going to cash. They don't ring a bell at the top. They don't ring a bell at the bottom. So thanks for checking in on the Captain's Blog. We'll see you in 2 weeks. Why 2 weeks? We're visiting the mothership next week out at Trilogy. But have no fear. We'll have a virtual helm with us in case the market and the volatility continues to increase.